Hello, it's ChewDog Charts. Contrarian investing is a type of investment strategy distinguished by buying and selling against the grain of investor sentiment. A contrarian investor enters the market when others are feeling negative and when stock value is lower than its intrinsic value. Figuring out which distressed stocks to buy and sell once the company recovers is the major play, and this strategy can lead to gains much higher than usual. When markets recover, a contrarian keeps a healthy skepticism as to how investors feel about the market. Overly high valuations can lead to eventual drops when investors' expectations do not work out. Contrarian investing is similar to value investing because both value and contrarian investors look for discrepancies in price between investments, trying to understand if an asset class is undervalued in the current market. At market peaks, such as today, it's very hard to be a contrarian, watching the market march ever higher. But as I've shown you, the risks now far outweigh the reward in my opinion. It's just that waiting can be excruciating, especially when the powers that be continue to manipulate the market. So let's take a look. In a recent video, I told you that the central banks provided liquidity to stop the recent stock market correction. Watching the chart, one could easily see the manipulation, but now I have the proof. Recent published data shows that the Fed balance sheet increased by $14.1 billion during the week ending February 14, 2018. That was right at the recovery of the recent stock market correction. So by the looks of it, the Fed had reverted back to quantitative easing by printing money out of thin air. And what they did was inject $14 billion into the banking system by purchasing mortgage-backed securities. And it's important to note that the cash injection can be levered up 10 times. In other words, the $14 billion injected is $140 billion of leverage for the banks to use for activities such as propping up the stock market. So by the looks of things, the Federal Reserve is serving Wall Street by providing a safety net around volatility. But it's also important to note that the market will be able to cry wolf only so many times, and it will only take that one time when the Fed does not come to the rescue, or that one time when the Fed makes a mistake. In the meantime, we'll be ready. So save your cash and be patient. So for today, that's ChewDog Charts. Thank you.